following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Hello there, everyone. This is Andy Hecht filling in for Tom O'Brien today. My boss, my colleague, and my friend coming to you today from Las Vegas. Tom is in Las Vegas today, and while we'll be missing him here, I will be seeing him later tonight. What do we have going on here? We have the Dow Jones Industrial Average is down about 16 points here. NASDAQ's off about 11, and the S&P 500 is off about 4 points. We have gold up $10.20 here at the moment. Silver's up 23.5 cents at $16.55. Gold's at $11.9320. We have light sweet crude oil settled on the New York Mercantile Exchange at up $1.50 at $60.75 per barrel. And we're having some volatility in the markets here. If you have anything you want to discuss or anything at all, just give me a call. 877-927-6648 is the number. Internationally, you can call 727-445-1044. Basically, the markets, we're seeing some volatility today here in the markets. Across the board, we have a weak dollar, down 500 points on the dollar index. It's at 94.6 here, and that's giving a boost to commodity prices. I'm not going to talk too much about commodities here because for the first hour I'm covering for Tom, and I'm going to talk about whatever you want to talk about, go through some things in the general market, and then I will hand the baton off for the second hour of the show over to Mr. Steve Rhodes, who incidentally has the second leg of his workshop coming up on Thursday night, May 14th, just 2 days from today at 6:30 Eastern Time. And you can sign up for his The Psychology of Trading seminar by going to the homepage at TFNN, and you can either sign up for his newsletter, or you could just pay $97 to attend, and you get the archive of the first session, which was just great. Steve did that last week. So I will be handing off to Steve in the second hour of the Tom O'Brien Show, and I will be back with you at 5 p.m. Eastern Standard Time for the Commodities Hour, which always airs on TFNN on Tuesdays and Thursdays from 5 to 6 p.m. Eastern Time. So, the market's down a little bit today. It's been choppy, the stock market. Ever since Janet Yellen spoke and basically said that stocks are overjuiced here, stock markets picked up some volatility. And basically, we've seen rates moving higher. Now, today we had a bond auction, a 3-year note auction, and the result was positive, yield about 1%. The long end of the market rallied, as it usually does when the short end goes up. We have the U.S. bonds are up 14 seconds. That's the 30-year bond here at 153.22. Let me just pop a bond chart up here so you guys can take a quick look at what's going on there. And, that market had come down pretty dramatically. And now it's in oversold territory. We have the momentum indicator, the stochastics, over at about 16.8, and kind of an oversold position. So not a surprise to see a little bit of a rally in the bonds here. But the lower interest rates, the higher interest rates, lower bond prices are kind of very interesting here when it comes to Yellen and the Fed. So you have rates moving higher. You have employment is hitting target levels. We can argue about how employment is measured by the metrics there, because a lot of, there's still a lot of underemployment in the U.S., and there's still a lot of people who have fallen off the employment statistics because they've been unemployed or underemployed for a long time. But still, the official statistics are hitting close to the target. Inflation is coming close to 2%. Look, we've had some nice moves in commodity prices. We have oil up from $42 a barrel on the lows in March up to 61 bucks here, $60.75 today. We have other commodities doing well. Copper has rallied from 240 up to 290 or so. And iron ore has come back a little bit. So, commodity prices doing better, and that kind of feeds into inflation, which is kind of moving the target inflation rate up to about 2%. Rates were very artificially low, but now that inflation rate could be steaming towards the 2% level, some Fed governors are going to push for a rate hike, and that rate hike could be coming sooner rather than later. So, I think that we're really in a mode here where the Fed is going to come out and raise rates by the latest September, and perhaps maybe even sooner. We have the June meeting coming up in a few weeks, and that will be a nervous time. And I think we're going to see a lot of volatility in markets ahead of that June rally here. So, basically the markets are going to be volatile. As I've been saying on my show, and when I'm on with Tom, I believe that 2015 is a year for trading and not for investors. I think that investors are going to get very frustrated with these markets that are choppy and trendless. So the important thing to do is to buy dips, sell rallies, take profits when they're on the table in all of these markets. And that's not just commodities. That's in equities as well. So, there are always little diamonds in the rough that we can find in the stock market or in the commodities market that have fundamentals on their own. But in general, this is a year for trading. There's choppy action around. I mean, the gold market is the perfect example. You have a market there, and I'll put a gold chart up there so you can see what I'm talking about. You have a market here that basically since March, the beginning of March, has been trading in a range between 11.75 and 12 and a quarter. It hasn't gone above the 12 and a quarter, even though the dollar has pulled back 6% recently, and other commodity prices have moved to the upside. Gold really has stayed within this trading range, and right now we're trading pretty much right smack in the middle of it at 1193.5, around the $1,200 level. 12 and a quarter has been the recent high, and there's some real resistance there. 1175 support. So what gold is telling us, maybe we have to look at gold as an example for the rest of the market. And I wrote an article about gold on Seeking Alpha, and I said this weekend that basically it's just a big snoozer, a lot of Z's. Gold is really not able to break out in one direction or another. Even though gold is expensive relative to other precious metals, the gold market isn't going down. And even though the dollar has basically tanked from 100 to 94, that's a 6% move in a month. That's a very big move for a currency. Gold really has not reacted. So what gold is really telling us about the global economic environment, and gold is a stability tool, is that things are pretty stable. So what you have to see, what we have to do is we have to take profits when they're on the table. We have to buy dips. We have to sell rallies, and we have to be very cautious out there with these markets and not get married to too many positions. So let's take a look at some action that happened today. I guess the big news of today, if I can get this chart up there, I hope you guys see it, is the action in America Online, which was purchased or swallowed by Verizon. AOL is up $7.82 today, up over 18%. That's a hell of a move, but basically Verizon is taking them out. And the interesting thing about this merger is that AOL is a very different company than when it started back I think it started in the 90s. And everyone used AOL for mail, for instant messenger, for all kinds of things like that. And I have to admit, I still do because I'm technologically slow. Dave White is always trying to convince me to switch over to Gmail, which I will eventually do. AOL, let me see if I can get this AOL chart up there for you guys. I'll just switch this on and off. We'll see if that comes up. They'll tell me in the production room if I got an AOL chart up there. But AOL, they basically right now, their expertise is pushing ads, advertising, and advertising is the big business on the web. That's where cash is created. And Verizon sees value in this, and Verizon is taking them out. So very interesting trade here. Very good if you're holding AOL stock today. But certainly some action over there in AOL. Other things going on in the market today. I mean, I don't see a lot of tremendous action. What I'm going to look at right now is the E-mini, because I like to look at these E-mini futures. They tell me a lot about what's going on in the markets. Actually, I think we're going to break. Yes, we're going to break. So we will look at that after the next segment, because next segment we have Mr. Basil Chapman with us. I look forward to that. Stay with us, folks. We'll be back after these messages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Jones Industrial Average down about a point here. It's choppy into the close. Nasdaq's down about 10. S&P 500 down about 2. So a pretty quiet day in these markets. I'm very pleased to have with us this afternoon a man who I only get to talk to when Tom O'Brien is out of town, Mr. Basil Chapman. Are you there, Basil? I wonder, is Basil there yet? Well, I'm sure he'll come on. They'll tell me in the studio when Basil. There he is.
Yes, I am. Hi, Andy. How are you?
Good. I'm good. How you doing today?
Very well, thank you.
Good. How's the weather in Boston these days?
Well, it's surprising. We've had 2 weeks of the most fabulous weather. Usually in May we get 1 or 2 really warm days, but then it gets back to cool. But this has been absolutely terrific. Been playing outdoor tennis instead of indoor tennis. Just fabulous. The grass is growing green. That's the way it's supposed to be.
Listen. If anyone in this country deserves good weather, you guys do.
Yeah, after the winter we had, definitely.
After the winter, it was horrible. and I'm sure everything in Boston is now surrounding this Tom Brady controversy.
There's a lot of talk about it, and what can you say? You know, sometimes things need to be moved on very quickly, and if you hang around too long, builds up into something huge.
Exactly. Well, it's the lead news on Fox TV and CNN. It just goes to tell me that there's not a lot else going on in the world.
That's right.
Which maybe is a good thing. Maybe it's a good thing. So, Basil, why don't you tell the listeners about your show and about your service, and then we could talk about some specific markets.
Okay, very quickly, my service is called The Opening Call. It's a daily newsletter that goes out. The chart that you see here is the preparation for tomorrow. Probably have to change the price of the Dow at this particular point. But I discuss what went on in the previous day. Then I have another paragraph that I add to it with what I think is the outlook. I also have an overview and market today section giving all the parameters and what particular technicals you might want to be looking at, whether it's the VIX or the short-term trading index or different levels that you need to focus on. And then I also have the charts of any particular issues that we have or we're looking at, as well as my Traders Corner where we have all our positions, which is updated every day. And that goes out from about 6:30 in the morning with this chart being the first, and then the overview, and by 8:35 the Traders Corner goes, and that's it. And there's one newsletter per day, and but with a lot of charts that you'll be able to see. If you don't have time, all you have to do is look at the overview. I'll give a very brief paragraph of just an assessment of what was in the other pages, and then we go through the different chart sectors. And then, of course, in my show, which is the same as your show, at 11 o'clock till noon every day, Eastern time, every market day, that is, and we look at charts, people call in, we discuss it. For instance, every day I show this Dow chart, and it's based on the Chapman wave methodology. And what I discussed a while back was that rectangle formations can last a lot longer than your patience. And that's exactly what we're looking at when we go to from February. It actually could be even earlier, but if we take it from February, from about the 17,500 level, the breakout, to the high that was made in March at 18,288, you can see we've been, even today, it's just a fantastic example of bulls and bears fighting it out. What happens very often in this kind of situation is that a break to the upside after being going sideways for this long really has to be substantiated by having, in this case for the Dow, having a break above 18,300, then holding the support, turning old resistance, which would be at about 18,000 to 18,300, turning that whole area into support and really establishing a brand new identity and a brand new upside open space. That'll be all-time highs. So until we do that, you're going to just keep bumping to this resistance. And what's really important about it is that if you look at the technical picture of many of the leading, say, Dow stocks, they are not performing all that well. Each move to the upside, even Friday when we had that big, it was an emotional move, a kind of short covering and perhaps some new buyers, even that did not produce real leadership. And this is, I think this is really the problem, that the leadership is becoming sparser and sparser. So I would not be surprised if we continue in this range-bound trading format for a little bit longer.
I don't disagree, Basil. You know, what I was going to say is the gold market is a great barometer, you know, for safety and for various things. And gold has been trading now since the beginning of March between 11.75 and 12.25. And every time, I mean, even with the dollar going down 6% over the last month, the gold hasn't been able to break out to the upside, and on the downside it's not able to break that 11.75, and it's kind of telling me that all these markets are in ranges, and that the probably for now, for the foreseeable future, selling rallies, buying dips, being very cautious and trading rather than investing is probably the right way to go. I think investors are getting very frustrated here.
So I absolutely agree, and I've been talking about gold for a very long time. Since the what we call the peak F top at that was in September, I believe, of 2011. The price in the monthly chart has been under the 9-period exponential moving average. If you're looking at my charts on the right, that's the monthly. It's under the black line. And the weekly chart has been going, and these are patterns that I talk about on my show every day. I go through these patterns that I call, in fact, there are really only 3 patterns. There's an arch pattern or an inverted V. It's the same thing going from the left side up and then back to the base. Or there's a cup shape. Or the cup shape can be V or a U shape, and that's really going from one level down and then back to that same level as resistance. Or there's a straight line move. And you can see in the gold, you've got a whole series of cups. But what really is fascinating to me is that for the first time in the S&P monthly chart, SPX.X, look at this chart. There is a time, not a price move, but a time move that is exactly from the February high, the all-time high of 2000, March of 2000, at 1557. It goes down to the October low of 2002, rallies up to the October high of 2008. That time frame is exactly where we were last month when we made the all-time high. Last month of 21.25. So there's an exact time match. That makes it very important that in May there's a break above 21.25, because if you've got a time match, that means that you're running out of energy to the upside in time. But the price says very clearly, the price in the monthly chart is held above the 9-period moving. Once again, it's that black line held above it, and that line is at 20.45. So at this point, you can see the MACD starting to turn down. Stochastic has turned down. There's a divergence between the price and the technicals. So this is a very critical period. But what I've been saying,
I agree. I totally agree. You know, it's very interesting. I think that the Fed is under Yellen. I get the sense. You tell me if you agree. And this is more from a fundamental than a technical. We have to go to break. Can you stay for a little bit?
Sure, I can, Andy.
Okay, we'll just stay for the beginning of the segment. Stay with us. It's Basil Chapman and Andy Heck coming back after these words.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. With about 25 minutes to go in the market, we have the Dow Jones Industrial Average down about 20 points. Nasdaq's down about 15. S&P 500 down about 4. Gold's up $10. And I am here, Andy Hecht, with Basil Chapman is with me today. I had a question for you, Basil.
Yeah, sure.
I wanted to, I've noticed, look, back in March, at the March Fed meeting, the Fed was they pushed back an interest rate rise because I believe they were afraid of the rally in the dollar. And they were very effective using verbal kind of signals to get the dollar to drop. And it's dropped about 6% since March. Now, the comments last week from Janet Yellen about stocks being too juiced here and too full value in the stock market. How are you looking at that statement? And do you think that we're going to see like kind of a delayed reaction in the stock market to like we saw in the dollar after the Fed made that statement?
Those are great questions. So this is what I'm looking at. I'm showing a chart right now, and the chart is of the 30-year. This is the white. If you look, you can see it. The white is the 30-year T-bond yield. The goldy yellow color is the 10-year note, and the 5-year note is here, that cyan light blue color. We're just where we've been through for the last 4 or 5 years, 6 years actually. Let's make it 5 years. We're right in the middle of where we've been before. Not even in the middle. In fact, we're in the lower part. We've still got a lot of room to go if they want to. I'd always thought, and I'd spoken about this for about at least 12 years, that the United States would eventually jeopardize their bond yields because of a weak economy. And I didn't know how it would unfold, but I thought it would be very similar to Japan, who brought the yields lower and lower and lower, and that we would be forced to do that. Well, we've done that. So this move now is just a move. I don't know if it's the move, because my reading of the economy is that there's been weakness for the past couple of months, and you can see that if I show you look at this. This is the S&P, and from where was that? From February till now, we've just been stuck in the same position.
Right. So very much in a range.
So my thinking here, if you look at the automobile companies, my thinking is that we've been in I called it a mini recession. Perhaps I should just say an economic slowdown, which seems to be visually, you can see it kind of matches the chart, which is very interesting because leading sectors like the XLV, the healthcare sector spider fund, is in the same sort of thing. It's just snuck out of the long-term channel, and here it is, turning down, holding sideways, but hasn't broken down. But the technicals are starting to break. So it's just a matter of time before they give way to the downside. So to answer your question, I think that if you look at the put it together, they've achieved what they've wanted to a certain extent. The dollar's now quite a bit lower than it was when it was over 100. It's at 94 in the index. It's at about a 1-to-1 decline in the weekly chart. So without even talking about the dollar earlier on, you started the sell-off in the dollar. It's really a consolidation at this particular point. So I think they've achieved a chunk of things. I don't think they actually have to raise rates at this particular point. It's kind of being done for them just by words and motions and by the stock market needing a rest. And as it takes this rest, I think yields will go a little higher. Stock market takes a breather. Then I think we might be in for a surprise. Stock market at some point could break out to the upside. So Yellen is at the equivalent of when Greenspan said exuberance. You remember that?
Yep.
We might be seeing the same sort of thing right now. So there could be quite a while to go before we start to see a major top in the market. But I do think we're in a consolidation phase right now.
Yeah, I think, I think she's more of it's turning out that she's more of an interventionalist, than she's certainly a dove, but she's more of a verbal interventionalist than an actual action interventionalist.
So reacting rather than acting, yes.
Exactly.
It's very, and commodity, we've spoken about this before. Commodities have been in a bear market, and that includes yields because of the competition for lower yields. So Absolutely. This is a breather. So I agree with you 100%. Gold had every opportunity to break out. So far, it hasn't taken that opportunity. That was a big move down in the dollar. The dollar, in fact, should be, in the 1200s, 1220 range. So I think that I agree with you. This is a very interesting time, and in all the different indexes, however you look at them, this is kind of a potential for an inflection point. This week, in fact, I would say is going to be very important, because if the Dow starts to break 17,500 at any point in the next week or two, that would set off a very nice consolidation. We need a consolidation. I would like to see a consolidation.
I think so too. I mean, you know, the U.S. economy. I agree with you. It hasn't been as strong as the stock market has been flashing, but I think that, you know, the rally in the dollar, the strength in the stock market is more a factor that the U.S. is the best of the worst. You know, Europe has had a really tough time. China is certainly slowing. Didn't they cut rates there for the third time this month already? It's third time this year, rather. You know, we are, you know, the U.S. economy is the best of the worst, but eventually it's going to filter through that things are not as rosy as perhaps the market is telling us. And I'm kind of feeling, you know, on a gut level that we have to see kind of a nice correction in stock prices here in the coming weeks.
A good clue to me was yesterday, after the big move up on Friday, that yesterday had selling all the rallies. If today, by the end of the day, we start to see a sell-off towards, not the lows of the day, but a pretty decent sell-off, that'll say the tide is turning, that the bulls are not able to hold their stance. And for a long time, 6 years, almost every sell-off has been met by buying. And I think that there's, if I look at the weight of evidence technically, the bias is that I see many more poor-looking stocks, weak technical stocks, than strong stocks, and that is a change.
Yes, that's a change. Well, thank you so much for coming and chatting with me today as I fill in for Tom, and I hope we get to talk. We get to talk to each other again, not just when Tom is off. We'll have to work it out. I'll come on your show in the morning.
And we both have brothers in Australia, so we should.
That's right. That's right. Exactly.
Thank you,
exactly.
Andy.
So have a great day, Basil. See you soon.
Too. Goodbye.
Anyway, folks, Basil Chapman, check out his show. It's a wonderful show, and check out his newsletter and his webinars. He's a brilliant guy who adds so much to the TFNN family. Thanks so much for joining me today on the show, Basil. So we'll just take a quick look. We have the Dow now slipping more as we're coming up 18 minutes to the close. We're down about 31 points. NASDAQ slipping by 17. The S&P 500 is down by 5. Gold's up $10. That's very quiet here. That's not telling me anything. You know, I wrote this article in Seeking Alpha about gold. It's just a big snoozer to me. I can't get excited about the gold market. You know, when the dollar came down, I was like, ooh, is gold going to rally here? But I kept looking at the relationships between silver and platinum, and the fact that, you know, there's huge divergence here with the silver gold ratio being over 71 to 1, with platinum being at a $60 discount to gold. They're telling me that either, you know, gold is too expensive or these other metals are too cheap. And I don't know if these metals are too cheap. Given all the things, it's telling me that the gold is either too expensive or it's going nowhere here. I just can't see it breaking up to the upside unless we see some action in silver and platinum here. But gold is kind of a mirror of what's going on in all the markets. Let's talk a little bit about oil here for a moment. I think the oil market is done very well recently. Look, we've come back from, and let me put an oil chart up while I'm talking. I have to remember to do that. There it is. I hope you guys see it out there. We've come up from $42.03 per barrel, which was the low in March, and now we're trading at about $60.75. So we've had a beautiful rally in oil, and there's many reasons. First, the oil rally was signaled because oil product prices like gasoline and heating oil started recovering in January and February. And we have to remember that consumers, we all buy oil products. We don't buy oil. We buy, you know, oil products. We don't buy the raw crude. So that kind of portended the rally. And as the crude oil market started to rally, we saw was on the lows rather. We saw rig counts declining, and declining rig counts will eventually have a lagged effect, and you will see production in the U.S., which probably caused a lot of the lower prices originally. Production will go down from the height of 9.65 million barrels a day. It'll probably decline over coming weeks and months because of these lower rigs out there. So we've seen a nice rally back in crude oil. We still have a lot of crude oil in the United States. But I still think that the shocks in oil, the price shocks, are to the upside. Now, having said that, I think that oil is at the top of the range here, and I think that the oil price will pull back probably to the $50 level. However, the problems in the Middle East are such that we could see a very violent move to the upside if things in Yemen get worse, if things deteriorate with Iran. Anyway, we'll talk a little bit more about this when we come back from the break. Stay with us, folks. Remember, the number is 877-927-6648 if you want to call in. I'll be right back with you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. This is Andy Hecht filling in for Tom O'Brien, who I'm very much looking forward to see in a couple of hours over on the Strip here in Las Vegas. We have the Dow Jones Industrial Average down 23 points. NASDAQ's down 14. S&P is down 4. We're chopping around, coming into the close. And let's see, crude oil right now is up $1.32 a barrel. It's at $60.57 per barrel, back over that $60 mark. We have gold up 940, right in the middle of the range at 1192.40. And I'll tell you, I'm so bored with the gold market. I think at the end of the day, the gold market is building cause to go nowhere right now. That's just how it feels to me. Silver up 22 cents here. Copper is up 2 3/4 pennies here on the highs of the recent trading range. Before the break, I was talking a little bit about oil, and I wanted to kind of talk a little geopolitical action here. You know, it's been very quiet about this deal between Iran and the U.S. and its allies. And, you know, the Brent versus WTI spread has gone out to about $6. And that's telling me that the market is not that concerned right now about Iranian crude coming on, which means that the market is kind of negative about a deal getting done. And another issue that's very interesting is that there's a big division in the Middle East now with the, you know, you have the Saudi king, the new Saudi king Salman in Washington, and he's basically snubbed the administration by bailing on a weekend summit at Camp David. And there's a lot of fracture between Middle East policy around the world. And I think that will add tremendous volatility to the crude oil price. And while we have a ceasefire coming up in Yemen, in that military action between the Saudis and their coalition partners and the rebels who are backed by the Iranians, while there is a ceasefire called, I don't think that ceasefire will hold very long. So I expect a lot of volatility in the crude oil price, and I think that that's going to range trade. I can't see crude oil running much past $65 because of the U.S. inventories, but I also can't see it going down too far because of the strength in products and because of the lower rig counts. Now, there was another thing I wanted to mention while we still have some time. You know, when I look at the commodity markets, and the markets in general, one of the most interesting markets, because of demographics and the growth of population in the world these days, is the market for agricultural commodities and foodstuffs. And I think with population now at 7.2 billion people, there will be strains in the years to come in the food business. Now, to that end, a company called COFCO, C-O-F-C-O, which is the largest food company in China, just hired a guy named Matt Jensen, who is a very high-level senior executive from Arch Daniels Midland, to run a joint venture that the Chinese have where they own 50% of Noble Agriculture. Noble's a big physical commodity trading house, and they trade a lot of physical grains, and a Dutch-based grain company called Nidera, N-I-D-E-R-A, B-V. And this big company, this big Chinese-backed company, and they paid a lot of money for this, these two subsidiaries, multi-billion-dollar company now. They're going to become a big competitor with Cargill, Archer Daniels Midland, Bunge, and Louis Dreyfus, who are the 800-pound gorillas in the world food markets. And those markets are the markets for grains, for corn, soybeans, wheat. And you know, folks, about a year and a half ago or 2 years ago, the Chinese came in and they bought Smithfield Foods, which is the U.S.'s largest and probably the world's largest hog producer. So the Chinese are very slowly and steadily using this period of depressed commodity prices to pick up strategic assets so they can feed their $1.3 billion the 1.3 billion person population, and continue to build infrastructure as they are still growing, although they're growing at less than 7%, maybe 6.8% or something like that. They are under their new normal. They are cutting interest rates. They are spurring growth forward, but they are making a lot of strategic investments, and we have to keep our eyes on the Chinese in all of these markets, because when it comes to all of these commodities, you know, agricultural commodities are really, really important for the future. So this COFCO joint venture between Noble and the Dutch company, now with a very senior executive from Archer Daniels Midland, which is probably the world's premier foodstuffs company, and the one that's on the technological cutting edge, is going to be very interesting to watch in the years to come. And we have to keep our eyes on the Chinese because they are in acquisition mode. And the lower that commodity prices go, the more they will acquire. The new real powerhouses in the commodities business are no longer U.S.-based companies. They're Geneva-based companies or Swiss-based companies like Glencore, Strata, companies like Vitol, like Trafigura, all European companies. You have Noble, which is a Hong Kong-based company, and the Chinese. The Chinese are the demand side of the equation in the commodity world, and that's going to affect everything. It's going to affect equity prices, bond prices, and eventually commodity prices during the next bull cycle, which will come in the next couple of years now that prices are falling towards production costs and so forth. And as Jay says in the den, they bought Smithfield Foods as well, and that was the largest hog producer in the world. So, and hog prices are coming back here, by the way. Well, that's more because of the avian flu affecting chicken population, but certainly we have to keep our eyes on the Chinese and their activities, particularly in agricultural commodities, because there's a lot of mouths to feed in that country. Anyway, folks, we're drawing to the end here. We have the Dow Jones Industrial Average down 28 points here. Nasdaq's down about 15. S&P 500's down a touch. So the equity markets are the downside here. Bonds are a little stronger today, and I think that's because of a 3-year auction that we had today, which was positive. There was more bid for, and the yield was about 1%. The long end of the bond is doing a bit of a relief rally here. But if you stay with us for the next hour, we have Mr. Steve Rhodes coming in. And Steve has a great workshop scheduled for Thursday night, May 14th at 6:30. And you could sign up for his newsletter and go to the workshop for free, or you can just pay $97, very cheap, to attend, and you'll get an archive of the first part of the workshop that he did last week, which is called The Psychology of Trading. And folks, when it comes to trading, the psychology of trading is the most important, because it's really, we have certain drives as humans, and the thing that drives us more is fear and greed. And when we trade, we really have to find a way to get a handle on that fear and greed. So Steve is going to help you with that, and it's going to be a great webinar. So I urge you to sign up. And Steve is coming with you, coming at you right after the break, and I'm going to come back and talk about commodities with him for a little bit in the second segment. So thanks so much for tuning in today to the Tom O'Brien Show. Stay tuned. We have passing the baton now to Mr. Steve Rhodes, and I'll see you guys at 5 o'clock in the Commodities Hour. See you later, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in
in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's Gold Report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Good afternoon from TFNN. Welcome to the May 12th Turnaround Tuesday edition of the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom, and I am the morning host here, and I absolutely believe that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a terrific Tuesday. Let's make sure we do everything we can to have an extraordinary evening. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. We make that one little 2x4 shift out there. It means we can find a gift in every set of circumstance that life is going to throw at us. I'm absolutely grateful for your presence here this afternoon. I'm here to serve you, so feel free to dial on in at 877-927-6648. Of course, internationally, you can pick up that phone as well. You can call us at 727-445-1044. This is Turnaround Tuesday. I'm Steve Rhodes. This is TFNN, and welcome to the show right now. We have the Dow. It closed out at 18,068. That was down 37 points. The S&P off 6. Closed out at 2,099. Composite off 17 points. She closed at 49.76. Russell 2000 off a little over, close to $3. Closing out at 12.33. Gold's up $9 right now, trading at 11.92. Silver's up 21 cents. Light sweet crude up $1.33. Leading the charge, the upside out here. We had Intercept Pharmaceuticals up $13, Receptos up $10, Humana up about $6 or $7, Tesla up $5. To the downside, with some volume, New Link Genetics, that was off 30%. Barrett Business Services, that was off 30% as well. Rackspace Holding down with down about $7, off 13% as well. Now, probably the question that everybody's asking themselves when you woke up, I called it Turnaround Tuesday. Now, I called it Turnaround Tuesday for the following reason. Even though the Dow finished off 37 points, do you realize that from the low this morning in the futures market to where we actually closed right now, it's a 150-point move off of the bottom? Now, you might be saying, if you're short the market, you might be saying, what the heck's going on here? If you're long the market, you might be saying, what the heck's going on? It is May the 12th, and you've seen a lot of jostling back and forth. You might be asking yourself, if I were you, I'd be asking myself this. In fact, I'm going to show you some patterns out here. You know, I'm doing a workshop this Thursday night. It's about human pattern recognition. But I'm going to show you a couple of patterns that exist out here in the market. And it's all about human pattern recognition, right? Because it's what buyers and sellers are doing. Do you realize this? Let me put this slide up on the... Do you think that it's unusual that we're experiencing this turmoil right here during the month of May? Let's go take a look at what the market has done over the course of the last 82 years. This slide that I've got up on my screen for you to take a look at, because what I need you to do is I need you to understand, how do you know where you're going unless you know where you've come from? Well, if we take a look at over the course of the last 82 years, this is a picture of the Dow. Here's your snapshot of the Dow. This is really just taking a look at from May 1st through May 18th. So that becomes from here to next Monday, if you will. And if we take a look at it, this volatility, and by volatility, I'm not referring to the volatility index, volatility of being up a few hundred points, down a few hundred points, just like we saw last Friday. Now, how is it that this chart, because if we take a look at last Friday's move, the actual 82-year average, is it because we have the jobs report that's released the first Friday in every month out here? You know, was that the anticipation of it? You know, look, here is the actual daily price movement inside of the Dow over 82 years, folks. Guess what that says? That the choppiness that we have inside the market, you should anticipate that. Now, wouldn't you like to know what's going to happen May 18th? The easiest way to do that is come on over to the homepage at TFNN.com and check out Mastering Probabilities, my daily newsletter service. But what I want you to do, we're going to stay focused right now on where we're at inside the market and the normal pattern that is out there. That's all that's going on. Everything that's taking place right now is nothing more than normal. If we go take a look at what's going on inside the ETFs, right? Normally, Tom starts with the SPYs out here, but I'm going to start with the Qs. Because as you know, if you are a technical trader, you take a look at volume inside the markets, you might say, as an example, the Qs today moved down with a volume of 31 million shares. What were they doing? The Qs were testing their most recent swing point out here from a few days ago, May the 6th. That had 42 million shares. In essence, was being tested with what? 31 million shares. There's not enough volume to go ahead and bust things down. Now, if you are a listener, if I'm not new to you and have listened to me over the years, you know that as a pattern recognition master, expert, whatever we want to refer to ourselves as here, you know that I've identified a pattern inside the Qs that is totally unique and different with regard to the way that volume should be used out here. And I'm going to shift because, look, you have to recognize that from time to time, patterns are going to shift out here. Whether it's humans, where our patterns are going to change, and I can teach you how to change those patterns as well. I'll do that Thursday evening. But if we take a look at volume inside of the Qs, what the Qs do, and you've got to get your head wrapped around this, the Qs make bottoms with high volume, large volume out there. If you take a look at the last big bottom that we had here, it was October the 15th. Volume down there, 108 million shares. That was the last real significant bottom. If you go back further and take a look at the bottom as it was forming back here on April 15, 2014, 84 million shares down there. Big volume is how the bottoms are formed. Now, when we have light volume, you might hear folks here at TFNN complain about the low volume that we have in the market. Let me show you another tool with inside the QQQs. I haven't shared this. I don't think I've shared this with anyone other than newsletter subscribers, but I'm going to go ahead and share with you a pattern that exists out here inside the Qs. If you're watching us on Tiger TV here at TFNN, hope that you are, here is a chart of the QQQ ETF. The bottom portion of that chart is average volume. It is a 10-day moving average of volume. What I want you to notice is that when the Qs in the past, so they've got a habit of forming significant lows with volume out there. What they also have a habit of doing is if you take a look at volume and use a 10-day exponential moving average, not just actually, I didn't even use an exponential moving average, I just use a simple moving average inside of the QQQs for this chart out here. Take a look at where those tops form. Those tops, which we're talking about going back to March 2nd, we're talking about going into November 29th, we're taking a look at a top out here from September 3rd. Each of those tops were formed when the average volume, the 10-day average volume, got down into the level in about 21 million shares or so out here. And we can take a look at what's going on inside the markets right now. So if we take a look, if we go back just simply, because I want you to understand what's going on inside these markets, then it's going to make it a little bit easier for you to make your decisions about what it is that you should be doing. If we again go back to this chart here, our 82-year chart, sell in May, what's been done on average inside of the Dow, it's saying that we don't maybe make a top until, not right now. It says we've got to go out a bit. Maybe it is May 18th. Maybe it's not. You got to come over to the homepage of TFNN.com and check out Mastering Probability. But what I can tell you is you shouldn't really, at least based on the patterns that we're taking a look at with regard to volume, guess what? Volume actually isn't low enough right now. We don't have low enough volume to actually go ahead and make that next significant top between now and July, when the market should actually really careen down to somewhere. We'll take a look at that when we get to that stage. So there's two different ways to go ahead and use volume in your analysis for what's going on inside the markets. So with regard to the Qs, what do we know? They're trading with inside their TAS market profiles from 106 to the 110 area. Really, they could get up to the 111.16 area. We just have a sideways chop. If we go take a look at what's going on inside the IWM, the Russell 2000 out here. The Russell 2000, what did it do today? Well, the Russell 2000's already done all of its work to the downside. Its work to the downside, I'm talking about, is referring to the March 10th swing point. 32 million shares there. This thing was tested on 3 different occasions with volume. Couldn't bust it down. You can't bust it down. What do? You try to go bust it up. Today we saw the IWM had 33 million shares, really just a sideways move. Tried again to bust it to the downside. Really found support as a TAS market profile low out at the 121.29 area. It says that the IWM, if it can really clear this little downdraft session from April 30th, that high out there is 123.44. There were 72 million shares. If you can clear the top of that, 123.44, it ought to get up to the 125.66 level. If we take a look at what's going on inside the SPYs, 113 million shares to the downside out here. Just traveling in a sideways consolidation in between the price of about 207 to about the 212 level out here. And quickly, we'll take a look at the diamonds before we go to break. The diamonds down with 36 cents, 4.7 million shares. No volume in its move to the downside. That is for sure. What it was doing was testing. Yeah, it was testing the swing point from all the way back here on April 17th. That had 8.6 million shares. Today, 4.7 million. Guess what? We need some more light volume. If you're looking for the market to really move downside, you actually want to start seeing light volume over the course of the next several days out there. This is Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom. I don't kick things off. Our Hotel California opens up at 8 a.m. each morning with John Logan. He does a show from 8 to 9. I do it from 9 to 11. Let's go to Ed from Milton, Massachusetts. Is that correct, Ed? Is that where you're from?
Hello?
Ed. Are you there?
What? Yeah. Is this Tim?
This is Steve. How are you?
Oh, I'm Steve Rhodes. How are you? Good.
I'm doing. Now, are you from Milton, Massachusetts?
I'm from Milton, Massachusetts.
The birthplace of President George Herbert Walker Bush?
And Thomas O'Brien.
Thomas O'Brien. There you go. Hey, you want to take a look at the VIX index? Tell me what you're looking at, how I can best help you.
All right. Why am I looking at the VIX? Because I am having the trading experience of my life. I have never, ever made more money in the 20 years I've been doing this. Now, the volatility is insane. The VIX is out of sync. What is going on?
Well, you're asking me the question, what's the VIX doing?
Well, the VIX is down around 12, right?
1386 was the close today, the cash VIX.
Now, is that considered low? Is low mean volatility, or does high mean volatility?
Neither. So the VIX can have many different uses. So what I've got to do, Ed, is give you what Stevie's uses are, which I think will help anyone when they're trading, especially the S&P 500 or the futures.
Russell 2000, baby.
What's that?
The Russell 2000.
Well, you can use the Russell. You can use, whichever index that you want. Right now, as we take a look at the VIX, here's what the VIX is doing. The VIX has been making higher lows. And it's been doing that ever since the trading session, Ed, of April 23rd. And that says that there is something that is coming our way. It's like if you were going to forecast if you're going to go ahead and forecast, an actual weather pattern or something like that, we would say that at this stage, there is a perfect storm that is brewing out here. Now, one of the best ways that you can use the VIX, there are a lot of people that talk about the VIX and say a low VIX means that there's no fear in the marketplace. One of the best ways that you can use the VIX is just simply apply the 50-day exponential moving average to it. Because those folks that say a low VIX means that there is complacency or that there is no fear in the marketplace, I still don't know how to trade that. I'm not really sure what they mean by that. In fact, I don't know that anybody does. Here's what I can tell you. Is that when you apply the 50-day exponential moving average to the VIX index, you can go back to 2009, you go back to lows in March of 2009, and what you can find is that the VIX was trading around $49 out there. Someone would say, comparatively speaking, that's a high VIX compared to today. As soon as the VIX index moved below the 50-day exponential moving average, what happened with the market, because I use it as a liquidity gauge, when it's below the 50-day exponential moving average, it says there's liquidity in the market, and the markets will just simply, markets have to do something with that liquidity, and they will move higher. So how you want to use the VIX, you don't want to pay attention to the number out there. The number is meaningless if you want to take a look at what is
the moving average. The moving average.
You want to apply the 50-day exponential moving average to it. Right now today,
50-day exponential.
Yeah, right now today you had the VIX close below that level. That level is right at the 1420 area, and it closed at 1386. So that's what I can tell you.
There.
Excuse me?
That tells us the liquidity is still there.
The liquidity is still there, and that's why I would say that the 82-year-old pattern of the market moving and jostling around between now and this Friday, now and next Monday, it's still in place. And today was a perfect example. Turnaround Tuesday, 150 points off of the bottom in the Dow futures contract. All right, my friend?
I don't know where this volatility is coming. All I know is keep it coming because it's fantastic trading. You know what you're doing.
All right. Well, we'll put that order into you to the VIX gods out there. Have a great day.
Thank you, Stephen.
You bet. Now, folks, you know what we do every Tuesday and Thursday at just about this time? We go over to our man, Mr. Andy Heck. Now, Andy does a wonderful show here at TFNN. Most of you are familiar with that. He does it from 5 to 6 on Tuesdays and Thursdays. He's got an extraordinary newsletter service, which you can test drive for free for the next 30 days. It's called the Technomental Commodity Report out there. Andy Heck, how the heck are you doing?
Great. How are you?
I am doing just wonderful. I hear that you're going to be painting the town red in Las Vegas tonight.
Oh yeah, I did the first hour. I'm on with you. Then I'll do my show, and then I'm off to the Strip to hang out with our friend, colleague, and boss, Mr. Tom O'Brien.
That sounds like a good time to me.
Should be a great time. It always is I always like it when he comes into town. He comes into town like a hurricane.
Absolutely, that's right. Yep. So, what are you taking a look at today? What can we take a look at?
We take a look at everything. Let's start and talk about gold.
Okay.
You know, to me, gold is a reflection of all of the markets. It's in a range between 11.75 and 12.25.
Mm-hmm.
And I wrote an article in Seeking Alpha, over the weekend. It's so boring, Steve. It's just like this range is so boring. And there's so many things pulling at it. Like the lower dollar says, hey, gold should break out above 12.25. But the price of silver and platinum tell me, hey, that gold should break down below 11.75. And perhaps that's why it's trading between 11.75 and 12.25 in a directionless fashion here.
I have a theory. And my theory is this. I think you mentioned gold. So gold is really I guess I'll call it a currency trade. It's a fear-based type trade with regard to currencies. One way to look at it. Mm-hmm. And inside and gold is priced in U.S. dollars. At least that's how you and I take a look at gold for the most part. And when we take a look at what's going on inside the U.S. right now, short of some type of terrorist attack, there's really no currency issues that are going on, right? The conversation is when our interest rate's going to go up. So there's really no currency issues. The currency issues are really over in Europe right now, right? The biggest one being Greece, or the biggest ones being, what's Mario Draghi doing? Is he really buying bonds out there? Is he really putting that liquidity out there? So I believe if we were to actually take a look at gold priced in euros, that's the way to take a look at trading gold. You're absolutely right. It's been trading in this $20 range closes, if you just take a look at the closes each day. And it's what I refer to as somebody, something, some force that's holding their thumb on the price of gold, what I call the hold, bang. And at some point in time here, that is going to bang and it's going to let loose. And is it going to be to the upside or the downside? I don't know. I think if we took a look at gold priced in euros, where it's really dealing with that fear type stuff, we probably get a better answer than priced in dollars at this moment. I would say that the GDX, and the chart that I've got up on my screen, on the left-hand side is gold, the right-hand side is a GDX. Do the miners know something ahead of time? Because if so, the GDX, even though it was with lightish type volume, closed above a level of resistance today, it should be at least headed up into the April 29 swing point. So whereas gold has not been able to do anything, the miners actually are looking stronger than gold.
The miners, yes, they are on a short-term basis. On a longer-term basis, they're still pretty weak. I think that I agree with you. I mean, gold and euros, I'm bullish in gold and euros because I think the dollar-euro is going to parity eventually. Yeah. So with gold, I think that we could get a breakdown below 11.75 in dollars, but it can still go up in euros.
Absolutely. Andy, I don't know if you want to hang out through the break. I know you
Sure. I want to talk about a couple other things.
Okay, we'll come back to Andy Heck. This is Steve Rhodes with TFNN. We'll be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Do you know the 7 most critical factors that influence every decision you make and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, to the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom for the evening. We had the Dow finish off 37 points, the S&P down 6. Of course, the bigger story was the Dow had from top to bottom had a swing of 200 points today, finishing well off the bottom, 150 points or so off of the bottom from early this morning. We're going back out to Las Vegas to our man Andy Heck. Looks like we're going to take a look at natural gas. Now, folks, natural gas has a unique pattern out here. Let me see if I can pull that up, Andy, before we head on over to you. You know, pattern recognition is so important. Pattern recognition is what we do when we take a look at the markets out here. Pattern recognition is something that I will be teaching this coming Thursday in my workshop, The Psychology of Trading. And the psychology of trading is so important because what I do is I help people understand why they make the decisions that they do. You see, there's 7 invisible forces that help shape and help us make, and these are things that are in front of us, but we don't really recognize. It's just like other patterns in the market. If you take a look at natural gas as an example, natural gas has a seasonal pattern that says that it's going to go ahead and make a low sometime in April. In this case here, that low came in late April. And then natural gas from a seasonal perspective runs up into about the middle of July out here, the middle of June, I should say, and then it just simply starts to fall off the planet. And if we take a look at the natural gas contract right now, trading out at $2.90 out here, we've seen a nice move. Looks to me like natural gas, Andy, headed up to about the 305, 315 area. What's your take?
I agree. I mean, I think this has been an amazing correction. You know, we're now. I'll talk fundamentally.
Yes, absolutely.
We're now in the season of injections, and last week we had a 76 billion cubic foot injection into inventories, which was fairly stealth. And we've had injections since early because the winter was not that cold this year, except for the very end, certainly in places like Boston. But we're up to 1.786 trillion feet. Which is 71% below last year's level, but it's still about 3.6% below the 5-year average. So what I think is happening here is that a lot of people continue to be bearish on natural gas, and they continue to get caught short. Open interest is about 1 million contracts here, which is not that high, but it's not that low either. So I think that what we're going to see is we're going to see natural gas trade up a little bit here. They'll get short again, they'll get stopped out, and this will happen over and over again. Now, when you come into the summer, Steve, you're dead right about the seasonal pattern. The only thing you have to remember is the real exogenous event is always a hurricane that hits the Gulf of Mexico, because the natural gas price that we look at is the Henry Hub price in Arath, Louisiana. So, and that's very close to the Gulf. And a bad hurricane like Katrina or one of the others that have hit, really can do a lot of damage and wreak havoc to infrastructure there and cause prices to explode. So that's always a risk. And it's been a couple of years, Steve, since we've had a major hurricane in the Gulf. So we have to keep our eyes on that this summer.
Well, we're going to keep it. We're going to keep it that way.
Yeah, no, I understand. I mean, we're not wishing for that, but for sure. But, when we have had those major hurricanes, the natural gas price has gone very quickly to over $10.
Absolutely.
So this is the most volatile. You're talking about volatility in the VIX. You want volatility? Natural gas, the most volatile commodity that trades.
I love. Well, speaking of gas, how about oil? We've had a nice move in oil. And folks, if you're watching us on Tiger TV, I'm going to share another pattern with you, so that you can something that you probably didn't know. It's always great just to share some pearls out here. Now, if you're watching us on Tiger TV, this is the weekly chart, by the way, that we're taking a look at. In the very top portion, I've got this broken down into 4 panels. The top panel is light sweet crude, the continuous contract. The panel just below that is the U.S. Canadian dollar. So it's that currency pair. The one right below that is the Mexican peso versus the U.S. dollar, and then right below that is the U.S. dollar index. Now, when you take a look at this, what you didn't realize when you're actually trading light sweet crude, you're also trading a couple of these currency pairs. And the one that light sweet crude is emulating the most right now, you would have no idea if you took a look at light sweet crude as it came off the bottom, whether it was really the panel number 2 or panel number 1, which means that light sweet crude is tracking the U.S. Canadian dollar. It's not tick for tick, but it is really, really darn close out there. So we've had a nice move in light sweet crude. Andy, where do you think that's headed to?
I think, first of all, great comment. about the Canadian dollar. The Canadian dollar is mostly crude, but it's got a little grain sprinkled in there because they're.
I was going to let you call it the loonie, you know.
Yeah, the loonie. That's right.
Leaving that
loonie.
out there for you. So
the loonie has been loony. It's really gone nicely. Now, I think. First of all, I think shocks in crude oil are still to the upside because the Middle East is a huge question mark. What is going to happen with the Iran agreement? The fact that the Saudi king has kind of snubbed the present administration because of the deal with Iran and the war in Yemen. This leaves a lot of conjecture, geopolitical conjecture, open for the price of crude. However, there's a couple of really competing things going on in crude. Number one, term structure. The difference between nearby crude oil and deferred crude oil.
Yes.
That went to a big contango, over 20%. That means that the deferred prices were 20% higher for 1 year than the nearby prices. That has come down to under 7%. That is a bullish sign, a sign of tightening.
What's the norm? What's the norm on that contango?
You know what? There's really no norm. Last year in June, it was at a $20 backwardation when crude oil was $107. It's really a real-time indicator on supply and demand and tightness or glut in the market. So it's a great indicator because it moves all over the place. And the fact that it's gone from 20% to 6.5% in about a month, hey, that has big ramifications for storage companies, for shipping companies, like, for example, like Nordic American Tanker, companies like that. So that's telling us something bullish. The other thing that's telling us something bullish is the processing spreads, the crack spreads, the price of gasoline, the price of heating oil, which actually outperformed crude today. Now, we still have a lot of crude oil in the United States. That's bearish. So my point on crude, we're getting pulled in two directions. I think crude's getting a little overbought on the short-term charts. I think it'll probably pull back to the low 50s eventually. I don't see it over $65 a barrel. That's
well, folks, one thing you can do, folks, if you're trading light sweet crude or SCO, USO, any of the ETFs out there, is take the current contract. We're looking at the June contract, and what you can do is you can put a nice little rising price channel just coming off of the low that was formed. Use the body of the candle coming off of that session from March the 18th, and you'll see a nice little price channel that held as the low here this morning, and that would say that light sweet crude should try to get up and test the candle, the shooting star candle from May the 6th out there. That high is 62.58. So if you start to see light sweet crude breaking this trend line, this channel line out here, then what Andy's talking about, a retracement, you probably ought to be looking for the first test in about the $56 area, with light sweet crude trading right now at 61.15. So Andy,
it's just a market. It's just a market, Steve, that's being pulled in two directions here by fundamentals. So I kind of apply that to what you're talking about technicals here. And you know what? In all these markets, I think there's a common theme, Steve. And I think that theme is that 2015 is very much a year for trading rather than investing. And nimble traders, you can make a lot of money selling rallies, buying dips. And I think all the markets are kind of poised for more of that kind of action.
It has been. It has been a great year for trading. You've had to go. Well, first, it's been a stock pickers market, so that's one thing that it has versus an ETF style market as it was for the first 5 years, 6 years off of the March 2009 lows. But now, with regard to the index ETF structure, it's been great intraday patterns that are out there. So the same patterns that we take a look at on the larger time frames are working on the smaller time frames as well. And the message I think that you're giving to people is you just don't need to get married to your position. If you just treat it like it's an electronic game, like if we were teaching you how to play Pong, or pinball or something like that, you're just looking for the patterns out there. We could teach these patterns to kids, like the game Super Mario out there. Maybe you played that. I don't know. I played that. Remember with my kids.
I played it with my kids. Yeah.
Yeah, and the kids, what they were able to do is, they'd ask you to play them, and you'd be like, right, like I want to play you, because they had played it enough where they could anticipate the patterns, and so therefore they could just basically kick your butt. But that's really all that it is. This is just another game. We take a look at the patterns in the shorter term. Now, folks, I do expect what we're going to see is we're going to see a break of these patterns here, and we're going to see a relatively decent move to the downside. The question is, when is it going to start? I have my belief as to when that's going to be, but I also believe that we're going to see higher highs in the market before the summer's over. So this is a market where you've got to stay on top of the different patterns out there in order to take advantage of it. So whether you're trading natural gas, whether it's light sweet crude, whether it's anything else, coffee, anything along those lines. And so stay tuned for the next hour, because I'm sure Andy will go ahead and cover all of the rest of the commodities out there. So Andy, thanks for spending this segment and part of the last one. Have a great show, and give Tommy a big old bear hug from all of us here.
I will. See you guys later.
All righty. Take care. We had the Dow finish off 37, S&P down 6, Composite down 17 as well. This is Steve Rhodes with TFNN. We'll be back to wind things down.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for the afternoon. I kick things off each day. Well, I don't kick things off. The things are kicked off each day now at 8 o'clock. John Logan. Then I come on from 9 to 11. So if you're wondering whether, the futures are down, they're up, what does that mean? You want to turn into that show. You can always catch the archive of that show on channel 9 and 10 for the 9 and 10 o'clock show, especially if you're out there trying to, learn technical analysis, understand the different patterns that we're taking a look at. There's nothing like pattern recognition. Look, I know that each of us are here right now because we're joined by this unique energy field. We're all trying to do better. I'm going to make that assumption that you're listening to the show because you're trying to do better. You'd like to understand what our take is or my take and where the markets are going, what they're doing. And it's always about being able to see things a little bit differently. That's really what my workshop this coming Thursday is about, the psychology of trading. It's not about what you think. It's like taking, here's another pattern out here. Let me take a look at a pattern for you. This is a pattern between the consumer discretionary ETF, the XOY, and the consumer staples ETF, the XLP. And what just simply, this is look, I'll give you the formula. I can give you formulas. Doing what you know, knowing what to do, they're two different things. The only way in order to be able to get those two things to tie together is to really understand what the invisible forces that shape you and that decision-making process. And that's really what it is that I'll be teaching, folks. I began that last Thursday. There'll be a follow-up session this Thursday. It's real easy for you to access that. You can come to the homepage at TFNN.com. You can sign up for the workshop, $97. No big deal. I mean, you spend that in a heartbeat, just for a decent meal these days, right? And I'm going to give you more than a meal. I'm going to teach you how to put meals on your plate out there and plenty more, and help you overcome hurdles. And if we take a look at the ratio of the consumer discretionary to the consumer staples, there's really typically problems when one outperforms the other. Discretionary is outperforming the staples out there. It's more of a sign of a bullishness inside of the market. The red line going across my screen out here, that happens to be the 50-day exponential moving average. That's just simply applied to that ratio between the consumer discretionary and consumer staples. And right now, there's no danger. Now, it's a lagging indicator out there. It's a lagging indicator, but there's really no problems inside of the market as we look at different patterns out here. I shared with you the pattern. Instead of what I like to do is when something's not working, the only way what you've got to do is go figure out why. So when there's a pattern that you've been used to using, it's not working, you got to go figure out, well, what's the new pattern? What is it that's out there? It's just like in life. If you're struggling to get over some hurdle, I don't care whether it's your health, your wealth, your relationships, you've got to be able to understand what it is that's blocking you from being able to get through that barrier. I can guarantee you that it's what it is that I'm teaching inside this workshop. So no matter what it is in life, if you're looking for a better relationship, you're looking to become a better trader, to be able to pull that trigger, whether it's the enter, it's the exit, whether it's to use stops, whatever it is, I'm going to teach you why you make the decisions that you do. And then I'm going to assist you to help you to bust through those barriers out there. If we only use the same patterns, folks, if you're going to do the same thing and expect different results out there, it's not going to happen. That's why we took a look at the QQQ series. The structure within inside of it right now is bottoms are made with big volume. the market never goes back down to test those volumes. Those become your significant bottoms. When that pattern changes, I'll be the first to sound the alarm, like riding through the streets in Boston. I'll be happy to do that. But right now, that's not the pattern that's out there. And if you want to understand a volume pattern, just the opposite with regard to the QQQ series ETF, start tracking the 10-day exponential moving average. You can do this easily on a spreadsheet. Just simply know that when that 10-day moving average of volume gets down into the 20 level, that in the past, for the past year or so, that's where the market has actually formed its tops out there. That says the Q still has a ways to go. And for those of us that are just simply saying, if you're looking for a top, you want to see light volume, and you want to see it over an extended period of time out there. So what is it that you should expect tomorrow? It's nothing more. It's weirdly, what should you be expecting for the rest of the week out here? Now, look. The market's going to do what it's going to do. All that I can share with you is what has it done in the past, and is the past going to equal the future? Look, for you and I, it doesn't have to. But for the market, for the most part, when you take a look at the conglomerate of buyers and sellers out here, guess what? The past typically does equal the future out here. And that says that what we see here for the rest of this week, I would have to say even Monday, is we see some more of this choppy market out there. So if this choppy market has created a problem for you, then just simply step aside and wait for some other better signals out there. Maybe it's going to go beyond that. Maybe it's going to go beyond this, because I'll put this chart up here. Here's a chart. This is kind of interesting. I just shared with you what typically happens over the course of the last 82 years. But how about this? This is 2015. And it's interesting, if you go back over the last 80 years out here, and you just take a look at years that end in a 5, which is what we're in, 2015, the Dow itself typically makes a low right around April the 21st. April 24th. Go check it out and see when the Dow actually has made a low in a most recent swing point. And guess what? In the years that end in 5, typically the market goes up, just to frustrate folks, typically goes up into the end of May out here. It's possible. It's very possible that we're in this cycle pattern as well. Only time will tell. And, of course, you'll find out by listening in at TFNN specifically, if you go ahead and listen in on the morning shows. But more specifically, go test drive the newsletter service, Mastering Probability. That's another way for you to get into my workshop, The Psychology of Trading. If you've never test drove Mastering Probability, there's no better time than right now. You can do it. Basically, you're trying it out for 30 days. No conditions, no ifs, ands, or buts out there. That's going to give you access into the workshop, as well as you're going to learn an extraordinary set of tools that you're going to be able to take with you. Hey, we had a caller from Massachusetts earlier asking about the VIX index. It was Ed. We take a look at the VIX index. If you want to understand just one of the absolute, there's several tools, but if you want to just understand the most absolute best tool to understand from a liquidity standpoint what the VIX means and what it's doing, and that way you're not paying attention to the number. You're just simply paying attention to where is it in relationship to the 50-day exponential moving average. This will help you a ton. And today, guess what? Close back below that 50-day exponential moving average. It's going to have to break below the low of 1270. That's the May 8th low to break this string here of a rising VIX. Look, if we take a look at the trend, kind of the trend inside the marketplace here today, what's interesting, if we take a look at the summation index for 3 of our indices out here, the New York Stock Exchange, that's the left-hand side panel. The center panel is the NASDAQ Composite, and the right-hand panel is the Dow. What I will tell you is, without a doubt, that the sellers are the ones that are still in control of this market, all 3 of these markets out here. So it is buyer beware, but definitely the price oscillators are below 0. That is across the board. That tells me who's in control of the market as we speak at 4:58 p.m. on May 12th, and that is the sellers. But that does not necessarily mean that you've got to sell, because maybe the market's going to bounce higher. I believe that it will overnight. The question is, what's it going to be doing about 9:30 a.m.? So tune in to the TFNN shows. If you get us on TFNN.mobi, many other ways. You can watch us on Tiger TV. Have a terrific evening, folks. I look forward to seeing you soon. Take care.